Every great market crash begins the same way, not with panic, but with celebration. Stocks are rising, profits are soaring, and everyone believes this time is different. The government says the economy is strong, the media calls it a new era, and ordinary people, the ones who were cautious before, start investing with full confidence. But that moment of confidence is exactly when the countdown begins, because history doesn't repeat itself word for word, it rhymes. And whether it's 1929, 2008, or 2020, every crash follows the same 4 stages of psychological cycle that never changes. Let's break it down. Stage 1. Euphoria. The high before the fall. It starts with euphoria, the stage of unstoppable optimism. The markets rise for months, even years. Everyone feels like a financial genius. In 1929, the Roaring Twenties created an illusion of endless prosperity. People took loans just to buy more stocks. In 2008, real estate was the golden ticket. Home prices never go down, they said. And in 2020, tech stocks, crypto, and NFTSs became the new gold rush. Apps were flooded with new traders. TikTok experts promised quick riches, and everyone thought they had discovered a new kind of wealth. But beneath all that optimism was cheap money, rising debt, and zero fear. And when fear disappears, danger quietly enters. Because when everyone believes prices can only go up, there's no one left to buy, only sellers waiting to panic. Stage 2. Denial. The calm before the storm. Then comes denial. Prices dip slightly. Analysts say it's just a correction. Investors hold their breath and buy the dip. In 1929, newspapers said the fundamentals are sound. In 2008, economists said it's only the subprime sector. Nothing to worry about. In 2021, social media said crypto always bounces back. But the cracks start to widen. Debt piles up, interest rates rise, and liquidity dries out. Yet people stay hopeful because denial feels safer than admitting something's wrong. The hardest truth to accept in finance is that the party might already be over. Stage 3. Panic. The collapse. And then panic. The line on the chart turns into a free fall. Fear spreads faster than facts. Suddenly, everyone wants to sell. But there are no buyers left. In 1929, the stock market lost nearly 90% of its value. In 2008, global banks collapsed. Homes were abandoned, and millions lost their jobs. In 2020, the world shut down. The fastest crash in modern history, wiping trillions in weeks. But underneath every crash lies the same emotion: fear. The same psychology that once fueled the boom now drives the collapse. And governments, ironically, respond with the same tool every time they cut rates, print money, and promise stability, which only sets the stage for the next cycle. Stage 4. Despair and recovery. The reset. After the panic comes despair. Markets are quiet. The news is dark. Everyone swears they'll never invest again. This is the stage where fear turns into silence. And, ironically, it's also where opportunity hides. In 1932, when the Great Depression hit bottom, the few who still believed quietly bought stocks that would later define American wealth. In 2009, when the financial system looked broken, the same thing happened again. And in 2020, those who had patience turned chaos into profit within months. Every crash plants the seeds of the next recovery. Because the market isn't a straight line, it's a living cycle, driven by emotion, policy, and time. Stage 5. The new cycle begins. The illusion returns. As recovery grows, optimism slowly returns. Governments claim success. Investors come back. A new generation enters, believing they've learned from the past. But human nature doesn't change. Debt builds again. Risk is ignored again. And a new bubble begins to form, quietly repeating the same 4 stages once more. Final reflection. So the real question isn't if another crash will happen, it's where we are in the pattern right now. Are we living through euphoria again, or standing at the edge of denial waiting for the fall? I'm the Lazy Economist, breaking down the psychology behind money and markets in calm, simple ways. If this helped you see the cycle more clearly, subscribe and share this video before the next stage begins. Because next time, you might spot the pattern before everyone else does.